Here come the bears. Market selling off, and the bears finally start to show up. How's everybody doing this morning? So we got Tesla earnings to go over, right? What were the upsides? What is the good news? What is the bad news? And right now we are just getting a pretty meaningful pullback, actually insignificant pullback in the S&P 500. So if we look at the trend right here on the right, and we're going to get to the macro, the economy is slowing, right? It is cooling. The economy is cooling. We're seeing that. We got some numbers in today. The economy is cooling, but it is cooling slowly, right? It is not speeding up in that cooling period. So we're going to get to that too, right? But first, before we get there, I wanted to hit up on this Fed Now story, right? They're talking about Fed Now, and before I lose the story, I kind of want to go over that. Sort of get a peek into Fed Now. We're going to talk about Chainlink's new CCIP, Tesla earnings, what the economy is actually looking like. Let's see if I lost the story. Did I lose the story? I don't think so. I think this is the Fed Now story. Let me make sure, because I know a lot of people have questions about Fed Now. Okay. So, yeah, this is it. This is the Fed Now story. Yeah, let's jump into that story. Before we get to the economics. I just don't want to lose the story on CNBC because I don't know if they're going to post it again. So let's check that story out real quick. Get my audio down. All right, that should be something we can hear, hopefully. All right.
Those troubling 3-day holds on checks and waiting for payments to clear in the sender's account and waiting for the bank to open on Monday or after a holiday. The FedNow system is an instant payment system. It's available 24/7, 365 days a year. To begin with, 35 banks and 16 service providers have already signed up. Those banks include things like JP Morgan and Wells.
So a lot of people have questions basically about FedNow, and they're doing a story on CNBC. So what is FedNow, right? Just so you can at least put this in the back of your mind at the moment. FedNow, instant payment system, right? Available 24/7, 365 days a week. 365 days a year. 35 banks, 16 service providers already signed up. Unclear if banks will charge for instant payments. So it is a way to create more efficiencies in the banking sector through the Fed. Yeah, is there more surveillance? Yes. But this is, just a lot of people have questions about this. This is your answer right here. This is the basic premise of it. It's an instant payment system that's going 24/7. Kind of sounds like a blockchain technology to some degree, right?
Fargo, as well as smaller credit unions and other banks. Unclear if the banks are going to charge for this instant payment. They are charged, but they may or may not pass that along to consumers. Fed Chair Jay Powell saying in a press release, over time, as more banks choose to use this tool, the benefits to individuals and businesses will include enabling a person to immediately receive a paycheck or a company to instantly access funds when an invoice is paid. This doesn't eliminate the PayPals and the Venmos of the world or Zelle. Theoretically, they could use the FedNow system, which is a bank-to-bank system, to send payments, but it's unclear, guys, if those services now face a new challenge from banks of all sizes that can offer similar services. Sarah?
But bottom line, faster payments, good for consumer, right, Steve?
I think so, Sarah. That's exactly right. I think.
So there's your FedNow. I know a lot of people had questions about FedNow. Just a quick summary of what it is. Quick, fast, instant, right? Instant payments. That's what we're looking at when it comes to FedNow. Yes, David, QQQ is down. Everything is selling off. I mean, the trend is still much higher, right? There's going to be pullbacks. We just had Tesla earnings. We had Netflix earnings. A lot of the market is starting to sell off a lot. But you also have the Dow up. So just keep in mind, as we sell off currently right now, right? And look at this pullback, really. In the bigger trend, it's not really, there's not much. There's no volume. There's not really a big, sell off. We're just reversing. We're pulling back into the trend. We're still in this uptrend. If I may draw it here, we're still climbing in the uptrend, right? That's the SPY at least. If we go to the IWM, small caps, they just tested a big resistance level. So they're just pulling back, right? The Dow is actually breaking out. So this is our market breadth for today, which is the Dow is taking the lead, right? Value stocks are taking the lead. So we know that we're probably going to see Deere, Caterpillar, Visa, McDonald's, Walmart, who knows? Those stocks in the Dow are catching a bid. So we're just seeing the catch-up trade from the Dow, maybe a rotation out of the Qs, rotation out of risk to some degree, because we also see IWM pulling back and ARC pulling back, right? So we are seeing that. I think it's mostly just a rotation that we're getting here. All right. Now, Tesla, right? Now, Tesla, I know a lot of you wanted to hear about Tesla really quick. So where's Tesla at? Tesla selling off pretty hard after yesterday's earnings. I did say, hey, there's a chance that we do just rip back down because it had such a sharp run up into earnings. You get the gap down, right? You'd have to have great numbers. We did have good numbers. I think we actually did see really good numbers, a really good outlook. There were some negatives, though. There were some negatives, some positives, and we're going to go over that. So this is let me turn that volume off. Look at the volume, though. 2 days of selling. This is normal, right? We've had 2 to 3 days of selling in this uptrend. That ascending triangle broke down. That's a bearish. That's definitely bearish right there. All right, so turn the volume off, and then let's take a deeper look at this. Tesla pulling into that previous support at 269, somewhere between 265, 269, right? That's that previous support. There's a lot of cash on the sideline. I think a lot of buyers come in because they beat top and bottom line revenue. They beat the margin expectations also. Okay, now here's the negatives for Tesla. If you guys wanted to hear about it, still holding, hope it comes back. Yeah, here's the negatives, here's the positives, right? We had basically, and this is here, let me zoom in here so you guys can read that if you wanted to. This is basically the negatives and positives that we're seeing. Key takeaways from Tesla earnings calls, right? We had we had 3 positives and 2 negatives. This is from Gary Black, by the way. He just kind of summarizes the earnings call. So one of the negatives, Q3 production will be down modestly from Q2. So production overall will be down, but that's due to the allocation of resources and time for upgrades. I think for Cybertruck, right? 2 to 3 increase Q. So they're working on upgrades, right? Because you're going to start bringing Cybertruck online at this point. So you're going to have to try to convert your resources. So you're going to see that. So that makes sense. It's not a real big negative. It's just, you know, people want to see, our Wall Street wants to see nothing but positive. And the stock's been up a lot. So there's going to be a reason to sell, right? They pushed it up. Number 3, the other negative, management wouldn't commit to further price reductions, suggesting it depended on whether interest rates kept rising. They might have to reduce prices to keep payments the same. So basically, if rates keep rising, this might, because they said we're not going to raise prices at this point. We're not going to cut prices at this point, which always hurts the margins, right? And the real question is, have the margins bottomed? So if the Tesla margins have bottomed, we're great. We're good. But the risk here is, okay, if the Fed raises rates, which they are set to raise rates, and I think they've already took that into account, they might have to further cut prices again to get the same amount of payments, which would hurt their margins, which would then send the stock into a spiral until there's more margin stability, right? Until we see that. But Elon also insisted that improved autonomy, so the closer we get to the fully autonomous vehicle, makes any margin degradation irrelevant because of how much productivity, how much efficiency that FSD will actually put on the table. Now the positives, right? Let's look at the positives a little bit. Here are the positives. Tesla's in talks with at least one OEM, right, to license FSD. So when that news does come out, if they do release that anytime soon, that's going to be a big catalyst. Does it last? I don't know. We'll see. So who is it? Toyota, Mercedes, Ferrari? That's probably not Ferrari. So one of the OEMs, right, is going to be licensing FSD possibly, right? At this point, it's kind of it's not the best catalyst because it's just, it's just he say, she say. So we can't really take that in consideration. All right, now Cybertruck does start. Cybertruck deliveries will start later this year, and then with the mass production into 2024. So that's the other positive, right? So we got Cybertruck online. We have one of the OEMs, another one of these companies who are looking at licensing FSD. So whatever, but Cybertruck starting, that's a big one. Tesla saw the largest quarter over quarter. This is a big one as far as fundamentals. Tesla saw the largest Q over Q deflation in auto cog per unit in a while, which is basically the cost of running your business, right? So that's what that is. Basically the cost per unit is going down, and that's the big positive here. The cost of creating the of actually producing is coming down. So that's going to help margins. So I really don't think, I think the margin story isn't just rates go up, it's also the costs are coming down, FSD, stuff like that. With the, also you got the supercharger, I'm sorry, you got the other stuff coming online, the robots working in the factory to produce that. So I think it was a good earnings report. We beat on revenue, we beat on EPS. So they beat both, and they did beat the margin expectations, right? So it just comes down to have margins actually bottomed. And that is questionable. After this report, it's not clear that margins did bottom. Although, you know, at face value, they did bottom. Okay. So that's the report for Tesla so far. Now, moving forward, what is the economy looking like? Because it looks like the economy is starting to slow. And this kind of points to, hey, maybe we have the Fed does not hike anymore. We are seeing some changes in the economic outlook, right? So if we look at today, initial jobless claims, first off, right, they're coming down. So what does that speak to, right? Recession, or does that speak to a recovery? Well, what this tells us is that so far in June through July, right? Actually the end of June through July, jobless claims are not rising. So people are finding jobs, right? We're not seeing an explosion in unemployment. It's just not happening yet. Although there is still weakness in the economy. Philadelphia Fed Manufacturing Index, right? One of the business. So if we look at the Philadelphia region of manufacturing, we've been saying and signaling that, hey, manufacturing still in a recession. This is a reason for the Fed to pause at some point. Still negative, right? No sign of recovery. Still negative there as far as the total manufacturing index, right? Employment -1. New orders. This is what you really want to look at: the new orders and the prices paid, and the, let me see, new orders, prices paid, and inventories. But right now they don't have inventories. We're going to look at the new orders. What are the new orders looking like? Negative, right? So still in a manufacturing recession, this will keep inflation down. This is going to keep inflation tame. It's going to keep the economy still slowing, right? Which means no more Fed tightening. Well, maybe not to the degree that they say they would or that people believe they do. But the economy is definitely slowing, and that's good because for the Fed, the faster we get to a real roll off in the economy, the quicker they can turn QE right back on, right? So the market, who knows how the market's going to react to this? For the most part, we're seeing as the economy is slowing down. Existing home sales, we got that this morning, negative, right? So we went from positive to negative. Existing home sales look like they could be rolling over. We did say, hey, the housing market looks like it's starting to bottom. If we look at a year-over-year basis, right, we did have that big upside move here. Not move, but you had some recovery. Now we're right back down. So so we should see yields start to come down because that signals weakness, more weakness, something maybe breaking. A lot more weakness in there, and that should ease financial conditions. We are seeing financial conditions starting to ease too, but the dollar is moving up at the moment. The dollar is chugging higher at the moment, and rates are not necessarily selling off. All right, so that's what we got: a weakening economy. It is slowing, but it's not collapsing. Right, we're not seeing that. When we get the services side of the economy, we'll see exactly what's going on there. So we're not getting a collapse in the whole economy. Now, what is the reaction to that? What is the reaction? Looking at the macro, if we look at the macro stuff, what is the reaction? Right now, the dollar is starting to retrace. Now, this is going to put pressure on the downside for riskier assets. We had that big break to the downside for the dollar. Now it's retracing back up, still in a bear flag. I mean, it's still bearish, right? We still have the moving averages above it pointing lower. So the dollar is going to retrace, and really, the momentum shifts once it hits that resistance and starts to roll over. And so we are seeing that. And it's also pushing oil lower, which is good, right? This retracement should push oil lower. But if oil doesn't break, it looks very bullish. So be careful if you're short oil, right? Be careful here because oil looks extremely bullish at this point. It is sort of bottoming and then possibly forming a wedge pattern to break higher, right? And that would hurt inflation expectations. So this feels like, okay, the rally's over, it's done. You know what I'm saying? This is how it feels right now, especially because we ran up so quick. we've had that rollover. All right. So going to 10-year yields sort of bounced, right? And it shouldn't be bouncing off that weak data. So we shouldn't be seeing that bounce, right? We should not be seeing that bounce. We're seeing weaker housing data. We should be seeing yields fall. That's not the case. Bonds had that big upside move. Let's see if they hold on here, if they just trend right back to the lows. So more muddling in the market, right? No clarity yet when it comes to yields. The VIX had a decent bounce, nothing big. Volatility is still lower. This is just the retracement. Remember, like I said, we've had such a strong run up to the upside. We have to pull back, right? We got to come back at some point. Volatility on the Nasdaq is also pulling back. Bond volatility is going lower. This is a good sign right here. Bond volatility going lower. Triple B spreads. Credit risk nowhere. It's still where it's at. Junk bonds are still being bought up. They're still higher. So yield. What do you call it? There's an appetite for risk still in the market, and we're seeing that actually play out, not in the S&P right now. Obviously, it's pulling back, not in the Qs, but in the Dow, right? We're seeing that rotation in the Dow as we speak. When the Dow does run out of room, we should see S&P start catching a bottom there. All right. Now, quickly going over to some of our other trade, like Bitcoin. Bitcoin is still consolidating 29K, right? The longer, the better. The more we consolidate at that level and hold, the bigger that breakout's going to be, or the breakdown if the overall market rolls over and it pulls it down. Ethereum, same thing, is still consolidating slowly, right? I got to get rid of some of these. Doesn't look like great price action. It's just consolidating uptrend. Now, what we do have, though, is we are seeing Chainlink start to surge. And this is the story we're going to go over in a second, right? Chainlink is starting to surge because this is the story of tokenizing or creating blockchain. The actual banks, the whole financial banking system. We see FedNow coming online, but this is the story of interconnecting the whole blockchain ecosystem together. They're not able to communicate with each other, but Chainlink allows that, right? So this is in my opinion, the most underrated crypto in the market, that actually has a use case that is actually being used by banks like Citibank, like the Swift network, right? By BNY Mellon, you're seeing big banks actually use Chainlink, right? Not XRP. You're seeing them use Chainlink, and nothing against XRP, but this connects the whole blockchain ecosystem, just like TCIP connected the whole internet, and it's connecting now other banks to the DeFi sector for derivatives, for decentralized lending and stuff like that. So we're seeing Chainlink make a big move. Is that a breakout? Not yet, but it is pressing that level. It is starting to press that level, right? And that's a big mover. If we see that all-time highs, we're at 50, and yeah, Chainlink looks pretty good there. All right, now rolling over to the sectors. What are we seeing in the actual sectors? Let's see the rotation in the sectors, at least in the intraday, right? So let's see intraday. What are we seeing here? This is industrials. Industrials still moving up. So again, you're seeing the Q sell off. You're seeing the S&P sell off, but that doesn't mean the overall market is selling off as a whole. We're just seeing rotation here. Okay, you got you got industrials moving up. You got utilities moving up. You got consumer discretionary, which is Tesla and Amazon. Those are all selling off hard, right? So there's that rotation out of consumer discretionary. We are seeing that. Consumer staples are moving up, right? That's why we see the Dow moving up, because most of those defensive stocks are going to be in the Dow more so the Q. So we're seeing defensive stocks move up. We're seeing a communication services sell off. That's more techie, right? Financials, they're consolidating. They're where they're at. Energy's pretty much had a nice little gap up. Energy might be moving up. Basic materials, I don't think anybody really invests in any of this stuff. Maybe they do. Pretty boring, but basic materials are staying up there, right? Real estate chugging along there. And then we see the healthcare fund gap up. So what are we seeing? We're seeing industrials. We're seeing industrials, defensive, and healthcare sectors move up in the Dow. So healthcare is moving up, industrials are moving up, and like I said, what I say, defensive, which is going to be XLP, right? Defensive. So we're seeing that rotation happen. It is not a complete sell-off. It's just a rotation, right? So the more techie names are selling off, like Amazon, Apple, Google. Actually, is Apple selling off? Apple tried to move higher and then it sold off. Google selling off, Meta selling off. This is a pullback. This is what you call a pullback. Netflix with a big gap down, sort of like Tesla. There will be buyers stepping in there. We're getting some buyers stepping into our support zone here at 269 for Tesla. Looks like the buyers are stepping in. right? Nvidia also had a sell-off, getting some buyers stepping in on that too, right? And it looks like it's just forming another channel there. So we'll keep around that. AMD had a very sharp sell-off. Unfortunately, I'm trading AMD right now. I'm trying to find an entry. Good thing I didn't add yesterday because we had a gigantic sell-off, right? Possibly off that Tesla news. Tesla, moves the market a lot. Tesla and Netflix, even though they did good, there needs to be a pullback. There's going to be a rotation, into the market, and we're seeing that. All right, Zscaler, not really interested. Zoom, still holding above that level, 72 level. We'll see if it can hold. It's not there yet. TSM actually got below. TSM might be filling this gap to the downside, maybe off the news that their guidance is lower. So TSM guidance lower. We're still keeping our eye on Teladoc for a trade. It wasn't able to hold above the breakout level, right? SoFi still doing pretty well. Roku trying to hold above there. Palantir still strong above 17. MicroStrategy may be given an entry point here, right? This is the Bitcoin ETF narrative. They have the most Bitcoin for any equity company or stock company. I'm sorry, stock company for any equity. So MicroStrategy is finally starting to show some relief here, right? That might be an entry point if you want to get in MicroStrategy after the breakout. We'll see how it plays out. But that's what we're seeing here. So advanced decline, up or down. Let's see for today. Ooh, you got to take, okay, I can't see. I'll see it on the other chart. So that's what we're seeing there. Now over to the Chainlink news. I wanted to go over the Chainlink news before we get to the technicals, unless you guys had any questions. I'm still holding. Hope comes back. QQQs, where you're trading the Qs. I guess that's a little different. All right, so yeah, the Chainlink stuff. Let's go over that real quick. This is basically the CCIP came out. You're starting to see price move because of the opportunity here. So yeah, let's go over this. Is this wait? Oh, there we go. Okay, yeah, we can see it here. Hold on. All right, yeah. So we're gonna go over this TCIP in a second.
Okay, so you've mentioned CCIP a few times now. That's your cross-chain interoperability protocol, which just launched. This is basically a DeFi TradFi connection. That's the aim here?
It's a messaging protocol that connects all blockchains into a single internet of contracts. So similarly to how the internet we all know and use is made possible by something called TCP/IP, which is a messaging and communication system that connects all the different internets of the world into one internet. You can view different blockchains as separate internets that need to get connected into one internet of contracts. And CCIP does that for both bank chains and public chains. And in connecting the bank chains and the public chains, and then connecting them together, you basically get a huge amount of value flowing from the banks into the public blockchain world, which is why I feel that the value of our industry can rapidly increase and easily go well past 10 trillion based on all the value and assets that banks are putting on chain now.
I know you're also working with Citi, as well as Bank of New York Mellon and some other industry players on that. So very interesting stuff with CCIP. Chainlink, Sergey Nazarov talking to us about developments in the industry. Really appreciate your time, Sergey. Thanks so much.
All right, so just wanted to keep you guys updated on that. Before you move on. And so what you're really seeing here is that a real use case, right? Chainlink, we've been talking about it for a while. You're seeing an actual use case happen, right? A use case actually happen for, Citibank's using it. The Swift banking system, the Swift is using it. And you have New York Mellon, the Bank of New York Mellon. And what they do is they're using the blockchain. They're putting assets on the blockchain. And so there's so many blockchains in crypto, right, to be used, but they can't communicate with each other. They just don't connect. So this is connecting all of them, sort of like the way the internet is connected, right? The internet is not one just World Wide Web. It was actually connected by TCIP, and that's sort of exactly what Swift is doing, connecting. I'm not Swift, Chainlink. They're connecting all the blockchains together, or enabling that, and then enabling banks or other entities outside of crypto to actually connect with that. So big infrastructure catalyst there, big infrastructure deal. That's how you tokenize everything. That's how you put everything on the blockchain. And we're seeing it happen in real time. We'll keep you up with the news if there's anything new. All right. So looking at Tesla, where's Tesla pulling into? We've been looking at these 4-hour charts. There's been a lot of support in the 4-hour chart. The last time Tesla did pull back into the 100 moving average on the 4-hour chart, we found support, right? We didn't really touch it, but we did find support. Now we're there again. The question is, can we hold? Can we hold at this level? Have we sold off enough? Can we hold at this level? Maybe if we don't, there is a gap to be filled at 261, right? There's a gap to be filled at 261, and we'll see those moving averages start to move up. Did get rejected yesterday after the call. All right, but we still have the daily moving averages, chugging higher. Hey, this is going to be a buying opportunity, right? I'm seeing the Qs. They may have found some support. I'm not sure. Let's do some technical analysis. Where do we need the market to support for this bull market to continue? Because we're still in a bull market, right? You can't, until that price changes. What would take us out of the bull market, right? First, you need a break of trend. So what we would need to end the bull market, right? You've seen this trend we've had this trend all the way from October, September. Or wait, we bottomed in October. This is from January. So we've had this trend. Maybe we even take this one. This is a little sharper trend. So we could say, hey, maybe the gas really runs out if we break this uptrend, right? That's what I would have to say. Once we break this uptrend on the Qs and we start to find resistance, so we break below it and then we check back up, or we retrace back up and we get rejected, then I say, okay, we're looking at a consolidated period. We're looking like we're going to either sell off, or when I say sell off, we're breaking the trend, we're going back to the downside, or we're just going to move sideways and chug sideways for a while. So that's that trend there for the Qs that you would need to actually break. And, we're not even near there yet still. There's a gap, though, to be filled at the previous break point at 372.89. We could just fill that gap all through earnings. It's very possible we fill that gap through earnings. Maybe today we sell off even sharper and we fill that gap over the next couple of days, right? That's also possible. So that is our next support on the Qs, 372. Looking at, okay, let's turn over to SPY. All right, so looking at SPY, also pretty sharp upside trend. Man, SPY almost looks like it's a little sharper. It looks different. Let me get rid of some of this stuff. All right. So for SPY, it looks like the uptrend we still have room to fall into that uptrend. And remember, these companies beat on earnings, right? They did beat on earnings. It's not a negative. You're just getting that rotation into Dow because the run-up has been so strong. Not a bear market yet. Okay. All right. So here's S&P. Now there's a couple trends. There's this trend, and then there's also this trend. There's a couple trends that we still need to stick above to hold this in. So again, we probably pull back into 444. That was a gap up, 444 to 442 for S&P. What a strong move higher into the beginning of the mega cap earnings, right? So currently I think we still have some room to fall there. Let's see, because we're looking at SPY. We might have some room to fall because we're just not at the level, right? We still have that support down here at 450. So we still could come back down to 450. Looking at a couple days ago, what is this? Monday, Tuesday? I guess Tuesday's price action. We're trying to hold that support. We hit to the penny 452.82, which was the previous support here. Do we hold? I don't know. Are we above VWAP? No, we're below VWAP. It looks like a sell pattern to me. It looks like the market's going to sell off, right? The only thing strong, like I said, is the Dow. Dow is very strong right now. So we're getting that rotation into the Dow, right? We are starting to see that. Oh, shoot. Sorry, I got to sneeze. Man, we've been having some very bad allergies here. What up, Manny? Chainlink, when it was at 5, but did it only because of you? Okay, nice. Yeah, Chainlink is ripping higher, bro. Good, nice. $5. Hey, that was the best entry right there. That's been at $5 since for like what, 3 years, 4 years. It hadn't been there for a while, so that's a good entry point if you believe in it. But they have a real Chainlink has a real use case. Again, it's not a meme coin. You're not trying to get lucky. It is literally being used by Citibank, Swift, New York Mellon, and all of blockchain, all of crypto. If you believe in crypto at all, if you believe in Ethereum at all, or in Web3, they all, Chainlink is the most abundant network being used by Web3 for a lot of reasons, including CCIP. I see gap on QQQ 373 to 375. Let's check out that gap. Oh, okay, yeah. Let's let me remove the gaps here, or remove the pre-market. Yeah, I have it at 37. Yeah, pretty much 373 up to 375, 375.50. That's definitely a gap that could be filled there. So yeah, we're gonna see some downside. But hey, this has been a strong run. If you want this downside, the reason why it's a good thing is because you're gonna get more players coming into the market. You're gonna get more risk taken in. Now, some people say no, they won't. Yes, they will. As soon as they see that support fill the gap, and they're like, oh shoot, we've been short the Qs for too long, they're going to get long, and we'll see. That's why we're waiting for price to actually touch these support zones to see how many buyers actually step in, as we FOMO, right? As we FOMO in to this market. So that's what we're looking at right now, is where how are things going to play out. So all right, now AMD, right? AMD did sell off pretty hard, right? We may be getting a bounce here. Depending, we did fill a gap. So AMD just filled the gap. This is why we always look at these gaps. I know I got a lot of stuff down there, but AMD just filled the gap at 111.31. Right below that, you have some more at 109.50. This has been a strong resistance. I mean, a strong support, 109, 110. Let's just call it 110. Pretty strong. So those are your levels for AMD. Right, we'll see how that reacts. But right now, AMD is starting to bounce. And this was tricky. This was a hard entry because it got above the resistance level 3 times. Very strong upside moves too. Big upside move, gets below it. Upside move, gets below it. Gets upside move, gets below it, and then we gap down. So AMD, a lot of capitulation there. This is a wild stock, right? This one, I think AMD is harder than Tesla to actually catch when it comes to a good entry point. It's really tough to get a good entry point on this. You almost have to buy the lows, right? The extreme sell-offs, and just wait. But hey, SPY is recovering really quickly. We're already back to we are already back to the VWAP. So SPY recovering faster than the Qs currently. And we'll find out why that is. But yeah, that's what it's looking like for AMD. Again, on the same view, if we look at Tesla, are we finding some support? Did we fill the gap? We do have a gap down here that Tesla filled, right? We filled that first gap at 269.74. That's why these gaps are important, because they're giving us some insight. Can it roll over? Sure. But that's our first support right there at that 269 level, was that gap that was not filled. Yeah, that gap never got filled. So great fill there on Tesla, right? Maybe you layer in, let's say you're not in Tesla at all. Let's say you have 0 shares. Me, the way I'd look at it is, okay, we filled this gap, very sharp sell off. I'm going to get in a third of my full position. If I'm looking to go long for the next 6 to 12 months, I'm going to get in third in my position. Let's say it goes lower, I'll start adding again down here, because we're still in an upside move, right? The macro is still improving. And maybe you wait for that dollar to roll over before we get some clarity there. All right, so that's Tesla. One second, I'll be right back. I take a little bathroom break. Be right back. You like that little thing back there? That's my treadmill. It's my walking desk, pretty much. Keep that music on 5. Hopefully the audio is pretty solid. All right, so yeah. And then let's check out Netflix earnings too. Right, let's take a look at Netflix earnings. How do they do? Because Tesla beat. See, Discover, CFO, Consumer. We'll be taking a look at CNBC2 and see what they say. It's really all about earnings season, and technicals, economic data is coming in weak. Morgan Stanley's top clean power picks include 2 stocks with 80% upside. Okay. Where's the earnings at? Netflix. There we go. I'm just gonna go to my other earnings report. Well, their user base did grow, so that was a positive for Netflix. But looking at their pure earnings, if we look at Netflix's pure earnings, right? let's start with the top line, right? Top line is revenue. They were expected to take in 7.97 billion. Here, I'll switch this to Netflix. Just take a look at Netflix, NFLX. I think this is a dip buying opportunity, not just for Netflix, but for the whole market as we pull back. I think it's just going to be a dip buying. I think during earnings, it looks like we will sell off during this earnings season. We'll sell off to find support somewhere because prices moved up so much. But if earnings have bottom, like I've said before, I strongly believe if this is the bottom of earnings, as in the next quarter is revised up, then we see a real meaningful bounce. So right now, Netflix has to fill the gap at 428.50. Right, there's a gap on Netflix where Netflix has to fill. So keep your eye on that. All right, that's Netflix. So this, yeah, it's had some strength, right? Anyways, going to the earnings for Netflix. So the revenue, the top line revenue. So always when you hear top line, bottom line, top line is like the first thing that comes in. Their pure revenue, right? Pure revenue growth is one of those indicators that you have a strong company that can bring in revenue, and that's what the top line is. So the forecast, or they were previously last quarter, they bring in 7.97 billion in revenue. They were forecasted to bring in 8.27 billion this quarter, and they actually hit 8.19. So they missed, right? They still had more revenue than last quarter, but they did miss on the forecast. So that's one big negative for Netflix, right? Now from the top line revenue is, top line is obviously revenue. How the EPS, or the bottom line, is really how good your strategy is. How can you convert those earnings, that revenue, into earnings? Can you retain your earnings? That's what EPS is. Can you retain your earnings through the revenue? And last quarter they came in at 3.2. They were expected to come in at 2.8, and they actually hit 3.29. So they retained their earnings better than they actually did on revenue, right? Or they beat expectations for earnings, but not revenue. Revenue is okay. Hey, we all know revenue is going to slow a little bit. The economy is still slowing, so that kind of makes sense. That's not a real big surprise, but they did miss estimates, so it's not that bullish. But the EPS, they did a good job. They did a very good job. The consensus was $2.84, and they retained earnings at $3.29. So that was a big upside retention right there for Netflix, right? Now looking at Tesla, top line revenue was 16. Well, let's look at last quarter. Their top line revenue for last quarter was 16.9, right? 16.9 billion. They were forecasted this quarter to come in at 24.29. They beat revenue at 24.93. They barely inched it out, but better than last quarter and better than estimates on the top line, revenue. Jumping over to the bottom line, so how well did they retain their earnings? Well, they definitely aren't going to beat from last quarter. Last quarter was a lot better. And their consensus was 79 cents. They beat at 91 cents. So they beat top and bottom line revenue. Their margins were expected to come in at 17. They came in at 19, I believe. Doesn't show me here. But either way, they also beat expectations on the margins. So the real question is, can the margins, bottom from here? Can they go higher? So interest rates now may become a risk to a lot of investors at this point, because they're saying, well, if those interest rates go up, that's going to cut their margins, and forget what they reported, as guidance. We're going to have to revise that lower. So that's going to be some pressure on the stock. If the Fed pauses, that's going to build some momentum in the stock. Other big companies who reported yesterday that we just didn't go over: Goldman Sachs beat EPS estimates, so they beat bottom line. I'm sorry, no, they missed. Goldman Sachs missed bottom line. And I think we did talk about this yesterday. And did they miss on revenue? But they beat on revenue, right? So whatever. They didn't do that great. Activision Blizzard, they beat on EPS and revenue. And forget the rest of them. Let's go down to today. What are we seeing today? Today we got J&J. Take a little drink here. Johnson & Johnson, one of the big healthcare companies, right? Their top line revenue came in at they were forecasted at 20. So let's just say top line. They beat top line. They beat revenue. Okay. And it was higher also than last quarter. And their bottom line EPS, they also beat consensus, and they beat the previous quarter. So J&J did pretty good. And we are seeing healthcare as a sector guide up right now. Is it just because of J&J? Probably not, but they're doing pretty well. Big companies that missed: Freeport-McMoRan missed. Manufacturing recession. That's a big commodity stock, right? That's a big manufacturing commodity stock. So like I said, we're going to see a rolling recession. Who are missing are the companies who are in the manufacturing sector, and probably the financial sector too. We've seen a lot of banking risk. They're probably going to miss. So we're seeing those misses there. Fifth Bancorp missed. American Airlines beat because they're an industrial. Remember, there's a lot of demand for travel, right? In American Airlines, we're expecting all the airlines to actually beat on revenue. All right, who else missed? East West Bancorp, more banks missing. I guess the rest of these aren't that important. Now, taking a look into tomorrow, right? Tomorrow is Friday. We have American Express. That's going to be interesting to see how the consumer, they're going to give us some insight into how healthy the consumer is. Are they slowing down? Are they selling off? Are they speeding up? And then other big Schlumberger, I believe, is Schlumberger. I think they're are they Schlumberger materials, basic materials? I believe. I could be wrong on that. And that's it, right? That's it until next week. Until next week, we get Domino's Pizza, right? How are the consumers doing? Boy, we need to stop eating Domino's Pizza, though. Come on, man. Come on, man. We don't need that Domino's Pizza. They shouldn't even be a stock. They should sell off. We need better health in America. All right, and then big Tuesday next week. Come on, it's the big Tuesday. Next week is huge. On Tuesday, July 25th, we get Microsoft in the PM. We get Google in the PM. We get Visa, one of the biggest Dow companies. Texas Instruments, Next to Energy. I know some of you guys are into Next to Energy. You get that. Raytheon Technology, some more industrial names. Verizon. Verizon should be a little itchy. But for the most part, the big names here are going to be Google on Tuesday, Google and Microsoft. I'd put Visa in there too. I'd throw Visa in there. And then I'm looking at some more. Let me see, that next Wednesday you get Meta. So next week is the big week, just kind of like last quarter, right? Google, you got the big mega caps. Google, what did I just say? Did I just forget who it was? It was Google, Microsoft, and then Meta on Wednesday. Visa too, their mega cap. Qualcomm, it's going to be big. You got Boeing too, another industrial. They should be doing well. ServiceNow, some people are invested in ServiceNow. This is all on Wednesday. So next week seems to be the big day. I mean, the big week. Do we have Apple this week? This next week coming up? Dang, that's a lot of companies on Wednesday. Wednesday has a lot of earnings. We're going to get a lot of data for Wednesday. And then we get Amazon on Thursday. Then we get MasterCard. We get McDonald's. So this was the week to start things off. We sold off. I kind of like that. I kind of like the sell off initially because it gives room for people to buy. And there's a lot of cash on the sideline still. A lot of cash on the sideline. This is going to be a buying opportunity for a lot of people who are a lot of investors, a lot of fund managers. No Friday? No earnings on Friday, or did I miss it? So yeah, that's what we're looking at for next week. Next week's going to be big. Tuesday, Wednesday, Thursday, mega cap names report. The state of regional banks, that's going to be important. Top housing markets, Apple chatbot. How about the Apple chatbot? That's crazy. Apple is now going to start their new chatbot. They just don't use the word AI, but it looks like they're going to, come up with their chatbot. Apple has an international foundation for AI called Ajax. A small team of engineers have built a chatbot that some call Apple GPT. That should be interesting. Apple GPT. According to the Bloomberg News report, access to the chatbot is limited within Apple. Some Apple staffers believe the company is aiming for a significant AI announcement next year, according to the report. And Apple will bring the market higher. So I think we get Apple earnings 2 weeks from now. I believe that's usually how it goes, right? You get most of the mega caps and you get Apple. At the last part. I still remember in 2018 when Apple reported last, it was on a Tuesday, February 1st, they reported, and that was my first stock that I ever really got into. I invested 800 and something bucks. That was big for me, and it went lower. It went from like 170 to 150. I was so hurt. I didn't know what was going on. I was like, what are you talking about? They're supposed to be so good. So yeah, the market is up a lot at this point. And there's going to be some consolidation, but the difference here is we're not at all-time highs, right? Not everybody's in the market. The macro inflation continues to improve. So there will be some buyers. There will be some buyers. That actually reminds me of something I wanted to look at. It is a survey. You pull this survey up. It is a survey that we saw the other day. Who was it? Goldman Sachs, Bank of America, Global Research, right? These are people right now, right? My biggest concern is, and this is consumer sentiment. I'm going to tell you why consumer sentiment and positioning is so important for markets, especially in these very volatile times, right? What up, Dimaj? Dimaj, what up? What up? What up? We got Dimaj. We got Manny in the house. Who else we got in the house? Who else we got in the chat today? Welcome, you guys. Trying to give you the best news I can. We're doing 90 minutes now at the maximum, so I can get some more stuff done. I'm going to come out with a YouTube video consolidating everything I said basically last week into this week. And it's not a new video, but it's like a compilation, so you could just hear the good news. It's kind of like maybe pumps you up. We'll see how it goes. Anyways, my biggest concern today, right? Sticky inflation remains the top concern for investors. Sticky inflation, right? A global recession is next. Are we going to see a global recession? I don't think so. I don't think so, because if inflation goes back up, yes, but no, it's not happening. If that oil price breaks out, possibly, because we're gonna have to tighten rates again. If inflation starts to bounce, so sticky inflation, global recession, financial stability, fragile financial markets. We're not really seeing that. There's a lot of liquidity there, especially because the money market funds have $5.5 trillion. That is liquidity. There's no fragility there. People are earning off that 5%. Don't forget, that is creating more liquidity. All the dividend stocks are creating more liquidity. Baby boomers have like $70 trillion in assets. They're still spending, right? So those are the big concerns. Now, what would reverse this? This would probably be core inflation dropping. Now, remember, I I talked about core inflation month on month was basically under 0.2. Annualized at 2%. So it's basically at the Fed's target. The biggest disconnect here is that owner's equivalent rent is keeping core CPI higher. Owner equivalent rent, That is keeping CPI higher. And owner's equivalent rent, I'm sorry, and those numbers are going to fall pretty soon. I said by the end of the summer, so my time is almost up. It is July 20th. The end of the summer would be basically August. August is the last month. So if we don't fall by August, then I was wrong. I was wrong. And then you can throw pie at my face. But for the most part, I think that owner's equivalent rent's going to roll over, and we should see that make a change. We should see that change come into play. So just looking at that, let's get back to the chart, unless I'm missing something else. I don't think I'm missing anything else. Yeah, let's get back to the chart here. What are we looking at? Netflix stock. Okay, so yeah, Netflix trying to find that support. Big gap down there. Okay, SPY just got rejected by VWAP. Any big movers today? Other than Chainlink? Or yeah, Carvana. I forgot Carvana had that big move. CVNA. Be careful with this. I just find it interesting that remember, this is a big short squeeze. We're looking at it so far back here at 14 bucks. You always wish you could have got in early. What is it up since we first pointed out? It's up 300%, 400%. Looks like Carvana will come back and fill this gap, possibly. Who knows? This is a wild stock, but 39.87 is that gap to fill. Has it done it before? Does it usually, fill gaps when it sells off? Yes, it does. Right back here, right? Look at back here in where was it? When was this? Is this June? Yeah, the end of June. Carvana had a nice gap up. Actually, that wasn't a gap up. When's the last time it really gapped? I guess we really haven't had a big gap up in Carvana. Just small gap ups. Anyways, yeah, it looks pretty good there. Carvana looks pretty solid. The Hollywood strike may soon hit media stocks. Huh. All right, so we got some analyst calls here from CNBC. Let's hear what they're reiterating. What is their reason? Morgan Stanley reiterates Tesla as equal weight. We remain equal weight given a balanced risk reward with a $250 price target and a bull bear case unchanged, 450 to 90 respectively. Nothing new there. Nothing new there. Wolf Research on Nvidia outperform. Nvidia is positioned to be the strongest grower in semis for the next 5 years. There's no change to our fundamental positive thesis for Nvidia. Our conviction has only strengthened after the exceptional May earnings report. We may consider Nvidia to be the strongest grower in semis for the next 5 years. Great. Microsoft, Morgan Stanley said the company is, and remember, these are sort of windows into what we're going to see going forward. There's investors are going to come in and buy this. This is why this is kind of sentiment here. Morgan Stanley said the company is a top pick heading into earnings next week with what is this, Microsoft, with the building momentum behind generative AI, easing optimization pressures in a more benign FX environment. That's right. FX, meaning the dollar falling, helps the earnings. Catalyst for positive revisions, consensus. So there goes not Morgan Stanley. There goes Microsoft. McDonald's remains well positioned for further share. What does McDonald's look like? I haven't looked at McDonald's, man. I don't really look at McDonald's like that. But hey, Dow stocks are surging, and it looks like McDonald's is forming a nice wedge here. Look at that nice little wedge. Although it doesn't really move much. but you do have a nice wedge. What is it looking like on the bigger time frame? McDonald's at all-time highs. It's a slow mover. You could probably sell options on McDonald's. I mean, the volatility is probably low, so you're probably not going to get much out of it. But hey, look, S&P, and S&P has been more volatile than McDonald's. Isn't that crazy? So when you get a surge in Dow, you know something's actually moving. Something's happening when you get that movement in the Dow. All right. Who else we got here? Chevron, Netflix, Bank of America raised its price target on the stock to $5.25 per share from $4.90 after the company's strong earnings report. I think we're gonna bounce here. Hey, appreciate the love, Dimaj. Thanks for the hearts. Thanks for the hearts. Appreciate you guys, man, in the chat here. I'm just trying to give a good little report. Hey, check this out. So these are upgrades. Trust me, there will be investors running into this. These fund managers want to see a sell-off. If anything, the bull market continues with the sell-off into earnings. Okay, I say the earnings catalysts have to bottom, but if they do bottom, you're going to get big buys into this. It doesn't mean price goes straight up. We got to think psychology here, not price. Price is psychology, but you got to think psychology first. If you're not in the market and the market keeps going up, you're not going to buy it. But if you're seeing these earnings reports, you know, come out better than feared, better than expected, and there's a sell-off, you're more likely to get deeper and bigger. So I'm looking for that base in the S&P. I'm looking for the base in the Qs. And this is, you know, this is where analysts are saying. So Netflix reported healthy Q2 results, which reflected strong net adds of 5.9 million versus guidance of, that's a big beat right there. And our 2.9 million estimate indicating the initial rollout of password sharing has been very positive. That's right. People just, you know, they love their Netflix. They love their Netflix. So the way the password sharing is also working is it'll just alert you and say, hey, because I've seen this happen a couple times with me. Hey, this is not the, can you confirm that this is you, that you are the primary, this is a primary, what is it, user? You're the primary user, so you have to send an email to your phone or your password. So if somebody else is using your Netflix, basically they have to text you and be like, hey, can you confirm? And then it switches over. So you can't watch shows at the same time, right? And so it's causing people to say, I'll go buy a $14 Netflix subscription. Really, really smart. Or you can try to play the system, but it gets annoying after a while, especially if you have a lot of people using it. It's just not going to work. Imagine you're trying to do Netflix and chill, or, you know, you're babysitting some kids and they're watching Netflix, and next thing you know, it moves. That would be piss me off. You might as well just buy it, right? It's probably worth it for most people. Wells Fargo reiterates Walmart as overweight. Okay, so Walmart. So we're seeing, that's probably why we're seeing the Dow bid up today. See, what's the Dow looking like? Dow is still trending up. That's really good. I like to see that. We're seeing a lot of strength in the Dow there. Okay, good Dow strength. SPY holding that previous level. IWM finally starting to show some relief. Qs starting to show some relief. Bank of America reiterates Alphabet as a buy. Okay. It's bullish on the stock heading into earnings next week. More defensive self-help stock, internet stocks. So we get the Google upgrade, IBM upgrade. Isn't that so weird to see Bank of America reiterating Goldman Sachs? I guess they don't directly compete. It's just funny seeing banks bid up other banks. Of course they're going to do it. They're like, hey, if you guys give us a better rating, we'll give you a better rating, right? That's imagine that goes in the background. Citi reiterates ServiceNow as a buy. Dang, price target of 718 for ServiceNow. So some of you guys that like now, NOW, right? Dang, that thing has been chugging along there. A lot of the semis have. What is Micron looking like? Still can't get above that level. We got Micron there. We got what's another semi? TSM. TSM sort of struggling. Looks like a Head and Shoulders. Looks like it could break down there. See, zoom in. That's a Head and Shoulders pattern, right? If it could break, it could definitely break down at this point. That's a crucial area at 97, right below 97. Maybe it comes back and fills the gap at 90. Maybe a short play there. Maybe you get a short play. They did guide lower. The guidance came in lower for TSM. How about those cryptos though? When are we going to see Chainlink here over on CNBC? That's when you know it's over. By the time you get that, I mean, American Airlines raises 2023 profit forecast after strong second quarter. And that's why the economy will stay afloat, because services are still strong. Services are still strong. TSM reports first profit drop in 4 years as electronic demand slumps. Wow. So maybe NVIDIA is just sucking up. Let's look at NVIDIA. Maybe NVIDIA is just sucking up all this demand, even though I thought that they got chips from TSM. So that's kind of confusing there, right? We can't time the market. It's time in the market that makes us winners. 100%. Dimaj, 100%. When I get the stream deck going again, I'll be able to notify you guys. I'm still waiting for these guys to get back to me on why the stream deck works. But when it comes to the soundboard doesn't work for Mac computer. It shuts down. Stupid. Really pisses me off. But it is what it is. NVIDIA, right? NVIDIA still moving up after that pullback. People will chase this. When does NVIDIA report earnings? That's going to be important. Stocks are up a lot. I really do want to see a pullback in the overall market and a consolidation to continue higher. If we just keep chugging higher during this earnings season, if we just make new highs, I think we're going to sell off sharply after that. That's going to that might happen. We might just shake out a lot of people. But if we sell off first, then we bottom, then it's going to be easier to have it's going to be a healthier market. It'll be a healthier market. So hopefully that's the case. Looking at these big techs here, Apple starting to broke that trend. Microsoft now selling back down to that big move that it had earlier in the week. Salesforce looks pretty solid. That was a big. This is a technical breakout though. When did this happen? That's a beautiful breakout. Talk about a breakout. When was this? This was like a week ago, a couple weeks ago. This is what you call a big breakout, right? It breaks out of this beautiful wedge pattern. Sells off, finds some support down there at that previous level, moves higher, gaps up again. This has been a beautiful stock. This is a really beautiful technical pattern here. CRM. Salesforce. How about that Palantir though? How about Palantir? What are we getting here on Palantir? All right, so Palantir's been breaking out of the. Oh man, I got so many lines here. Sorry. Let's just clean this up. Sorry, Palantir. I'm gonna have to clean this draw setup. All right, so clearly we got some support at 17 here on Palantir. And that's really been the resistance that we broke above. So maybe it consolidates for a while. But Palantir has a lot of upside. This earnings report could take it to like 26. It could take it back up to 26 where I started buying it in 2021. Right? Big drawdown for me on Palantir. But yeah, like it's stair-stepping its way higher. It's still in the uptrend. Palantir still in the uptrend, but this thing doesn't trend that clear. It just breaks and moves. It just breaks and moves. Not a whole lot of clarity there for the AI move. ZM is still at our level, still holding on there, right? Still holding at the top of that level. They've had a lot of reduction in growth lately, but if they do catch a bid, then if growth starts to return a little bit, I think this stock pops. I think it's very undervalued at this point. Kind of a overreaction to the downside, but as long as we arc rotating up, yeah, I think that's ready to go. I think the last earnings report did actually really good, but there needs to be a little momentum going back to the upside. So we'll see how that plays out going forward. I like it. I like it for the big break to the upside. This thing has upside. Zoom has some upside, right? And Zoom, people still use Zoom. It's not disappearing. I know it's competing with Google Meets and Microsoft Teams, but this has some freaking upside right here. And that's why I personally, not financial advice, but to me, this is a trade. I'm not like looking to hold it long term, but I'm looking to trade this into 2025 or at least the end of 2024, the next Fed cycle. And if you get a real good start here, this thing can really run for sure. I am doing some research on the back end to see how high this thing could go, right? But Zoom has a lot of room still. Same thing with Roku. Right, look at Roku. It's near breakout zone. Roku's about to break out also. So Roku's getting near that, you know, it's consolidating there at that level. Kind of looks like Open Door when Open Door broke out. Remember, Open Door was consolidate. Oop. Open Door was consolidating for a while down here. And it was consolidating here. Let me pull this up so you can see. Yeah, we had Open Door consolidating at this level. Come on, mouse. I swear this thing's broke. And it broke out of that level. It's like a cup and handle, right? So what I'm saying is I think we're seeing that with Roku also. We're seeing that sort of sharp cup and handle. We get above that and it's off to the races. But we need the overall market to roll up, right? To start rolling back up. So ZM, Carvana. Oh, we're not really looking at Carvana. Who else do we have in the pipeline? I'll look at some more. Baba. Baba looks like it's bottoming here. Finally starting to chug higher. I don't really like Baba. Not a fan of it because you just never know what's going to happen in China. But I know a lot of people like to trade and look at Baba. It is breaking out of that wedge. Found some support, but it's whatever. It's whatever. It was supposed to be the Amazon of China. I guess it sort of is. You can't even see it there. Hey, Dow making new highs. This is really good. Market breadth is turning up. Look at this. Dow is making new highs. This was the bear market trend that we broke above early in December, and then we sold off, and then this is a reverse. This is a clear. Can I draw on this? I don't think I can draw on this, but this is a clear reverse. See if I could just do this. A clear reversed head and shoulders pattern. Very bullish. Boom. Boom. I've seen people use this tool so quick. Why is it so slow on my end? Anyways, this is yeah, this is it. This is why I usually use the other trading view. It's a lot easier. But reverse head and shoulders there. You can see it. And now we're breaking out, right? Get that back in line. There we go. So now we're breaking out. So this is the Dow. This is market breadth. We have a couple more levels to get above, but it's carrying the market. And this is why I'm still confident that the market has legs. We're not going into a rotation back to a bear market. You wouldn't see this happen in the Dow if that were the case, right? IWM is above the previous support or the previous resistance. It has a little more resistance to go, right? There's a little bit more resistance here for IWM to get across. It's literally in that zone. So we'll see if, small caps can get up there. What is another index that we look at? Emerging markets. I mean, who cares, right? Who cares about emerging markets? I don't really think it matters, but that's what we are seeing at the moment. Any questions before? I mean, we're not done yet, but any questions before I move on? The economy is cooling. I'm going to have all those charts up on Wednesday. Oh, shoot, I didn't even see this. A lot of investors got grilled emotionally. They took all the bullets during the fall, and they panicked and got out of the market with minor gains or hardly any gains. Yeah, time in the market. It's always about time in the market. not timing the market. If you want to time the market, then you better book with me. But timing, I mean, time in the market, not timing the market. Two different things. There's a way to time the market, though. There's a way to time the market. You're not going to always be right, but that's why you have a stop. That's exactly why you have a stop. See, what am I missing? I don't think I'm missing anything other than CCIP. See if there's any. I'm going to see if there's any more news. UK government rejects proposal to classify crypto as gambling. That's just because they say, well, why let people gamble their money, but you don't call that a security. Well, I guess that's not really security, but Telegram bot token surged. Oh my gosh. Telegram. 10 billion people will go on chain over, and this is really a big thesis. 10 billion people will go on chain over the next decade. Oh, is this City right here? This is 3. When did this come out? Citibank. Oh shoot, let me take this off. What do I got? EM on here. SPY. My bad, looking at the wrong screen here. Looks like we're already catching a bid there on S&P. All right, let's look at some correlations. Keep S&P here on the right-hand side. And that's the gap, really. This is the gap down we had. So we're already starting to fill the gap to the upside for S&P. I'm going to keep it on this. Let me add VWAP on here. The heck? Why didn't it add VWAP? Oh, there we go. All right. So S&P back above S&P back above VWAP. Right, just taking out all the noise. This was yesterday's price action. Sold off this morning, got above. We're already breaking the trend to the upside. Left-hand side here. Let's take a look at Tesla. Is it? Ooh, Tesla looked like it bottomed. Looks like we fell a bottom here. Looks like we're finding a bottom. This is the 5-minute chart. Clear bottoming at 269. That was the gap. Remember, that was the gap to be filled for Tesla. So Tesla's right back at that bottom. I told you, well, I thought, hey, buyers would come in at that gap. AMD, is it holding up? AMD filled the gap also. Yep, AMD filled the gap. There's a gap down here. Sort of came back up here. I'm still holding my AMD calls. I don't know if I want to add to it yet. Oh, I didn't even know I could receive calls while I'm on a live. That's crazy. Oh, you know what? It's because it was on my computer. Did I lose a connection? Maybe, maybe not. Actually, let me turn this light off. There we go. That's the setup I wanted to see. Plus, we're gonna have some new stuff in the background. You'll see it you'll see it later. Get the stream going a little better. Yeah, a lot of people got shooken out. So S&P right back above that level. Now this Citi says mass adoption of crypto will be driven by CBDCs, central bank digital currency, tokenization. Crypto is approaching a point of inflection, says Citi. This is Citibank, right? The industry is finally approaching an inflection point in that blockchain technology will soon see billions of users, trillions of dollars in value. In its latest report, Money, Tokens, and Games, blockchain's next billion users and trillions in value, Citi analysts suggest that the influx of crypto adoption will be powered primarily by the rise of central bank digital currencies and the tokenization of real-world assets. Hence, not Gary Gensler, hence, what's his name? Larry Fink has been talking about the tokenization of everything. We see FedNow, which is somewhat a CBDC. Not exactly, but FedNow is attempting to eliminate a lot of the... I know they say like Visa, MasterCard aren't threatened by it, but they are. They are threatened by it. They're just going to use the infrastructure to some degree. CBDCs are alternatives to cryptocurrencies like Bitcoin and Ethereum. Not really. Based on our current trial, CBDCs would be pegged to a fiat currency, but in the dollar or the pound, but exist digitally and be controlled by the issuing currency central banks, such as the Fed or the Central Bank of England. During a panel event during the Citi Digital Money Symposium, which coincided with the reports released, the bank's Future of Finance, led by Ron Goss, suggests that there will be 5 trillion circulating in the economy of CBDCs by the end of the decade. Still, he added the caveat that most of it will not be blockchain based, but some of it will have blockchain interoperability, Chainlink, and DLT. Specifically, DLT refers to the distributed ledger technology, which does not necessarily include using blockchain. The swift adoption would be due to the myriad advantages per report, including the interoperable payment instrument, and general enthusiasm from the developing economies, Chainlink. Still, there are nonetheless clear risks, notably protect the user privacy, blah, blah, blah. Commercial banks to move over to CBDCs. So in a small package, tokenization, CBDCs, right? Digitizing assets are all going to need an oracle. I mean, not all of it. Some of it won't be on chain, but you still want proof of reserves. You still want that interoperability to happen. Got more updates on CCIP? This is the deep dive into CCIP. Let me see. Can I like zoom into this? That's pretty cool. All right, anyways, on the backhand of things, S&P climbing, AMD trying to climb. Looks like it still looks weak. I mean, it's still weak, but you don't have a huge sell-off pattern happening, right? Advanced decline is negative for the first time in a while. Qs are pretty negative, IWM. Okay, cool. Yeah, this Chainlink stuff is kind of complicated, so I'm not going to go through it yet. But what I will do is turn it over to see if there's any talking heads right now, any videos. So the streaming, what is this? Paid subscribers as of May 2023. So if you look at the streaming wars, you got Apple TV, Peacock. Who uses Peacock? I don't use Peacock. Hulu, Paramount Pictures, Warner Bros, Discovery, Disney, Netflix. NU holding strong. Who's NU? NU Holdings? Oh, shoot. Okay. I never really look at them, big man. Wow. They've been moving up. Yeah, they've been moving up pretty dang strong. Hassan, what up? Was this sell-off a buy opportunity in your opinion? Yes. And I'm not saying like it's buy like right now, but it's creating, Hassan, it's creating a buying opportunity. You kind of missed it. We went over CCIP. I guess you could go back into you can go back and listen. I need to get timestamps on these videos. But yeah, it's creating a buying opportunity. Tesla filled the gap, found support, could roll over, but you know, there is buyers here at 269.50 for Tesla. What else did we discuss today? This morning, can't remember exactly what we discussed, but I'm talking about the streaming wars really quick. So Netflix has the most paid subscribers as of May of 2023. They have 238 million. Next is Disney at 157 million. Warner Bros. At 97 million. Paramount at 60 million. Hulu at 48 million. Peacock at 22 million. And then Apple TV at 40 million, 20 to 40 million. That's interesting. So Netflix still has the most subscribers. And the question is, is anybody gaining market share on Netflix? I haven't really looked at Disney, Warner Bros, Discovery. Who owns HBO? Is that Paramount, Warner Bros? Not sure. So yeah, we talked about the sell-off basically giving an opportunity for people who are not in the stocks, who are just not in stocks yet. Oh yeah, we did go over Tesla, the upside and the downside too. Early on the report. But yeah, let me know if you want me to go over that again for Tesla. Next week is the big earnings reports from Tuesday, Wednesday, Thursday. We have more mega caps. For the most part, who's actually moving today? Keep our eye on oil. housing market is starting to roll over. I know we say, oh, it's going up, it's going down, but what we're seeing is that housing is bouncing. We'll see if it continues to hold these levels. Some of the data shows that it's not going straight up, which we track this on a weekly, monthly basis. So we're just saying, hey, it bounced from the lows. It is recovering, but it's not over yet, right? It's not fully recovered yet. So we're going to keep our eye on that. Also, we had, what else was weak today for the economics? Oh, the Philly Fed. So the manufacturing activity is still very weak. And we got very weak earnings from some of the manufacturing companies actually too. Who's the manufacturing? Oh, the banks and the manufacturing pretty weak. So that's what we talked about this morning a little bit, other than the Tesla stuff. The good news is, hey, there's one OEM supposedly that is talking with Tesla to basically subscribe to full FSD. Not a whole lot of news right now. Where's the macro stuff at? Okay, here it is. There it is. We are very open. So this is Elon basically saying that we are very open to licensing our full self-driving software and hardware to other companies. We're already in early discussions with an OEM about using Tesla FSD. What the heck is OEM? I don't know. I really don't know what the acronym is, to be honest with you. But I think it just means literally one of the original equipment manufacturer in the business of word means company that makes product to be sold to. I think it just really means like another car company, basically, when it comes to OEM. I wonder why they use that word. Oh, a company that makes a product to be sold by another company. So yeah, I don't know. That's interesting. Another OEM. People are still worried about margins a little bit for the FSD. Same stories. Pretty much we're seeing the same stories here come on over and over again. But yeah, Tesla stock is holding up at the moment. S&P is starting to recover. Qs are starting to recover. Moving over to the macro. What is the macro looking like? Yeah, let me just look at the macro. Things are sort of just calm right now. Oh, is this the halftime report? I was waiting for that. Yeah, I want to hear I want to hear the. All right, cool. Yeah. We're going to go over the halftime report with Josh Brown, Jim Lebenthal. We're going to listen to that before we check out of here. What are we at? 1:30? Yeah, this is the last thing we'll do. We'll check out the halftime report, see what these guys have to say, make some comments there. And hey, the dollar is pushing back up. The US dollar is trying to make a move higher so far. And but it's broken down, so it's going to get rejected more than likely at the 101 level. 10-year yields sort of pushed up. That's not good. Oil. Oh, hey, nice. Oil, because I have a dude who's trading oil right now. It's looking weak. Thank goodness. I want it to break down. Let's go oil. Oil is still the most important chart. If it breaks down Forget the base effects. Everybody keeps saying, "Oh, the base effects." Well, June of 2022 was the highest inflation print, so inflation should go back up. No, it's the rate of change, bro. It is the rate of change of inflation that changes inflation, not literally just because it had a base effect. The base effect means we'll see the biggest move in June. We saw the 3%. We just won't move lower as fast as we did. And plus we're at 3%. It doesn't mean inflation is going higher. It means it's going to slowly trickle back down. That could change. If shelter comes in low, we collapse. All right, so I just want to go over that really quick. Looks like everything's still in line. We're still looking at the same thing here. We're getting market breadth. We are getting market breadth. Okay, the Dow is up today. Key level, the Dow is up. Chainlink is surging off the CCIP news. Got up to 838. We bought at 5, going much higher. All right, so yeah, let's listen to this. We'll check this out. Love downtown Josh Brown. Yeah, me too. I like downtown Josh Brown. Hey, Microsoft is smashing it. Oh, I didn't even see these. Here, what floor for a Tesla do you see again? I see 240 area. Yeah, 240. I agree. 240 big man's coming is probably the floor for Tesla. It depends on the overall market. I say if the overall market rolls over, then Tesla's, and it makes a meaningful drop. I think SPY down to 2. SPY would have to come down to 231. That's when we see Tesla down to like 240, 235. But if SPY sticks around 244, then I see Tesla coming down to 250. So those are the levels that I'm seeing in regards to that. The heat map's 50-50 in the greens, barely green. Yep, we're still holding on after that report. Yeah, let's listen to these guys.
And Jim Leventhal. Let's go to the markets, take a look at what we're doing. Dow's good for 278. That's just shy of 1%. It's a red for the S&P and the Nasdaq as well. 385 is the yield on the 10-year note. Jim, I've come to you first because I do feel like it's time to have a growth versus value debate. Today, the laggards are leading. It's energy, it's healthcare, financials, industrials, transports have been strong lately, and tech has taken a little bit of a peel back today, which I'm suggesting may be a good thing that we're having. Take a little break and see these laggards start to get a little something going.
It's making me feel good, Scott. I mean, you know, I'm long the cyclical trade. I'm overweight the cyclical trade, so I'm enjoying this. I do think it's overdue. I want to be clear, though. I don't think this is a situation, nor from the beginning of the year have I said it's a situation where tech is fundamentally damaged. But at the moment, I do think it's ahead of itself. It's dragged the market higher with it, which is a good thing. But you're seeing the broadening out right now. Here's the most positive thing I can say. When you think about these sectors that have lagged, like energy, like materials, like financials, there's actually fundamental reason to be long these sectors going forward. The earnings have been coming in better than expected, albeit early in the season. But economic activity, which should promote the profit growth for these sectors going forward, is really quite strong. It's what I've been saying all along. I'm not changing my tune, even as I do some trimming on the margin of some positions. I really do think that value is poised from this position to return better than tech, both because of where the price action has been, mainly they've been laggards, and also because of where I see earnings growth going forward.
You feeling good about that Goldman Sachs sale? It's up near 3% today. Financials have just gotten going.
Yep.
Too.
Well,
and now you're a seller of Sherwin-Williams.
Yep.
Still thinking the market's going to pull back.
Yeah, and well, but let's also put this into perspective in terms of size. What I said, and I said this to you yesterday, Scott, I do think at any point in time you can have a 5 to 7% pullback. Now, the market, by the way, could go up 15 to 20% before that happens. And what that means is when you do a little trimming, as I'm doing in the portfolio, you do not get carried away. I'm about 7% cash right now. I'm not going higher than 10%. That's way too much. If I'm wrong in the market rallies, the other 93% that's invested right now will do just fine. To the question that may be on people's minds, well, wait a second, if you're long all these cyclicals, why are you trimming a material stock like Sherwin-Williams or a financial like Goldman Sachs?
Good question.
I
Good
know
questions,
you.
viewers.
You know, I've worked with you for 10 years, Scott. I feel a symbiosis here. I've got so much in these cyclicals. I mean, I'm really overweight, and being underweight technology has hurt me. I want to add to technology when it comes down, if it continues to come down. This is not a spot that I want to trim. I've got a very strong overweighting to cyclicals, so that's where I've got to take.
So, Josh, how do we view this idea of growth versus value in this debate, perhaps being back? If you look at the 1 month performance, let's say, of the major averages, everything's in lockstep. The Nasdaq over a 1 month period of time up 3.8, 3.9, the Dow up 3.8, and the S&P up 3.7. Today, the Dow, and this week, by the way, over a 1 week period, the Dow is up 2.75% versus somewhat muted gains for the others.
One of the things that we were talking about this spring when we were saying, okay, this is a nice rally, but is this sustainable? Like, can we persist and get back to the old highs, or dare I say get through? And the question was, well, I don't know. Can we do that with 7 stocks, or are we going to have a catch-up trade in the rest of the market? Or it could have gone the other way. You could have had the rest of the market stay stagnant and have these giant growth stocks eventually succumb and catch down. I think we know how that story ended. We've gotten the strength of the rest of the market, and you've got an advanced decline line now for the S&P 500 that is the best since August of 2022. Today, though, is back in the day we used to call this a upside down day. So upside down day is like your biggest losing stocks were the big winners, and your big winners took a breather, or some people would call it counter trend. That's what you're looking at right now. Out of the top 20 performing stocks in the S&P 500 year to date, 18 out of 20 are down today. And they're not down a little. They're down an average of 2%. So that's an upside down day. I wouldn't use that. I know we're doing a segment, but I wouldn't use that to concoct a whole new narrative about all of a sudden the leadership for the rest of the year is going to switch. It could, but one day is one day. So you got nice outperformance out of healthcare today. These stocks have done nothing this year. I don't know if you know, but the XLV actually is down 2% year to date.
It's been terrible.
Look at so look at J&J. It's up 6% today. You want to roll the dice tomorrow? You want to tell me it's up another 6% tomorrow or next week? You know what I mean? So I wouldn't go there. I wouldn't do that. It's a nice catch up. Look, I have stocks that are making new 52-week highs today. JP Morgan, Berkshire Hathaway, Invitation Homes. I guess these are like my value stocks. Okay, great. I don't think that we should extrapolate a whole new market regime based on what's going on this morning.
Oh, no, Kerry. I mean, I think you could look at this and say, if you're bullish the market, this is exactly the kind of thing you'd like to see. Not to suggest in any way that all of a sudden tech is going to fall back and then these stocks are going to lead. But if the so-called catch-up trade is real and lasting, then that's a good thing for the overall health of the market.
Yeah, exactly, Scott. And again, if you look at today and J&J leading the Dow, I mean, J&J is the same price as it was in May of 2021. It really needs to start to move, as do other healthcare names that have been just incredibly poor performers. What we see in Tesla and Netflix in particular today, and they're the ones that are leading the march down, are 2 incredibly strong stocks for this year. I mean, there is no doubt that in the minds of many owners of Tesla and Netflix, they have wondered at times, gosh, is this going to last forever? At what point do I think about selling a little bit of my holding if you've owned them from the bottom of, over the last year or two? So I think it's very healthy, as Josh said, that we have some reprise. If you look at what happened in April, it was similar. We had an enormous rally in March, and the market took a pause in April before rebounding again in May for the growth stocks and the big tech names. So we think it's healthy. We really need to have sort of some calming down of expectations for these stocks. Not saying the earnings won't grow. I mean, the earnings are growing very, very nicely for the large catch names, but we have to see some plateauing for just a period of time before they can advance again and let the rest of the market participate, not just catch up, but participate, which is what they were not doing.
Amy, what's your view?
You know, I think this is a reversal, but I think it's not just, it's a reversal based on news. J&J reported this morning, Netflix and Tesla reported this morning. So people are reacting to what the expectations were and the data that we got. So I think it does mean a little bit more than just if this was a reversal day, you know, not based on news. You know, the large technology is trading at almost a record premium. You have to go back to 1999. These stocks, the large cap, the earnings have not been great. It really has been multiple expansion. If you look at them as a group, earnings are actually down. So I think, you know, we made some trades last week.
Look, bro, we know earnings are down. Like that, the projection is that this is the worst earnings quarter. And if the markets are forward looking, which they are, markets are forward looking, this is the, if this becomes the bottom of earnings, we just saw Tesla beat top, bottom line and margins. We saw Netflix also beat, not on the top line, but they did beat the EPS. And user growth is up. So the sell-off, I agree with the last lady who just talked, which is there needs to be some breath. We need to breathe a little bit, and we're seeing breath. Dow is starting to surge, and that is good news. So there needs to be a pullback. We are starting to get that that pullback in place. But the valuation story, like, get out of here, bro. Like, the inflation is coming down. The economy is stronger than we expected. The Fed is, if not pausing this month, which the market doesn't expect that, it's going to be pausing later. The dollar is rolling over. All the macro is in place. And I know I've said this over and over and over. All the macro setting up. We just need the bottoming of earnings to come in. And we're starting to see that. We're seeing weakness. We're seeing strength. Next week's going to be the big week. We get the Microsoft, Amazon, Google, Meta, and then the week after that, we get Apple. So these next 2 weeks are going to be vital for the Fed to, for the markets to pull back and consolidate is perfect. That gives the opportunity for these people who are positioned offsides to finally come back in. Right now, positioning is very important in the market, and a lot of people are still offsides. Like I say over and over and over, sentiment still kind of negative. Sentiment is improving, though. Sentiment is definitely improving, but there's still, you know, it doesn't matter if people think things are improving or people think it's bearish. Where they put their bets makes a difference. So I'm thinking as we consolidate here on the pullback, that people start putting their bets in. It takes like 2 or 3 days of sell off. So I'm thinking by Monday, Thursday, Friday, or either tomorrow or Monday, we'll see if those bulls start to step in, right? Or those people who are positioned off sides actually start to come back in and shift back into the market, triggering a rush back in. And we'll see if that actually takes place. But yeah, the valuation, obviously she's short, she's under positioned, like most people are under positioned. They want to see more pain before it goes higher. Totally fair. Oops. Oh.
I do think this is potentially the start of something, you know, maybe not for the next few weeks, but over the next 12 months of a reversal. And
how did we know she was bearish? I could tell by first thing she mentioned was valuations are stretched. Valuations are a little stretched to the upside. So I knew she was bearish. So she's looking for a rollover for the next 12 months, bro. Based off this earnings, hey, maybe you're right, lady. Maybe you're right. But you got to be right about the macro too, and you got to be right about positioning too. And what's going to get people to sell this rally off is going to have to be inflation. We saw the survey. It's going to have to be inflation stay stickier than expected. Maybe that's the case, but again, we got to track this month on month. And you know, right now we're looking at the business cycle. That's what I do. We check the business cycle. What are the economy looking like? What is the Fed looking like? What is policy looking like? Oh, Joe Biden's still printing. Consumers are still spending. We still got a bull market in the services sector. Manufacturing is still weak, but you know, AI is really taking over. And you know, now you got Fed now coming into the market. There's a lot of good things coming in. Crypto starting to bottom. Risk appetite's on. Bond yields are peaked. Bond yields maybe have peaked. The dollar's rolling over. Global liquidity is picking up, and I think that's the other main factor, other than position, is global liquidity is picking up. And I'm going to throw that chart up after we're done. We're almost done here.
I do think it's healthy, but given the weight in the indexes, this isn't going to be good for the market overall.
You know, Jim, it's not like the Nasdaq is having like the most horrible day ever. I mean, even though Netflix and Tesla are a weight on it, and that's because Apple, Microsoft, and Alphabet, at least the last I looked, were all in the green. And Apple's been at a new high. Microsoft's been right around there as well. So you had to figure anyway that, and maybe it'll still be the case, that if tech does have any kind of sell-off, that it's going to be quickly bought.
Yeah, exactly.
By people like you who are raising cash, looking to get a little more engaged.
That's, yeah. I'm sorry. I'm listening to your words, and I've been engaged, as you know, for quite some time.
I'm more engaged in tech.
Gotcha.
That's what you said.
Yeah. In fact, had this conversation, Scott, this morning with one of my analysts, saying, "Okay, well, how are you going to feel if Nvidia goes down 10%?" And let's just. I'm not picking on Nvidia, but it's obviously the one that's up the most this year.
Yeah.
I don't think for 1 second that Nvidia is going to go down 10% because of some fundamental breakdown in the company. That I really don't believe. Could Nvidia or any of these stocks do what Netflix is doing today? Of course it could. And it could just be because expectations are too high, and when results come in, there's a little bit of disappointment. But as if Netflix were on my buy list, it's not. This would be a great opportunity. I obviously have to have cash to do something.
All right, whatever, bro.
You're not saying it because it's not going down.
Hold on, I just want to hear what Josh Brown has to say. We know what she's saying. Blah blah blah. Rotation. Risk for big tech. We've already talked about the rotation risk. TSMC selling off. Here we go. Let's hear Josh Brown. He's a superstar here.
Short-term bottom.
That's why you come here for Josh Brown, right? All right, let's hear what he has to say, and then we're out. I'm going to show you the global liquidity, the dollar narrative, the macro, and then we're out.
It is extremely highly correlated with the SMH, as it should be. And
what do you make of what's happening here from Taiwan Semi? Look, Nvidia has, what superlative can you use that hasn't been used already? But what's your view?
I think Taiwan Semi is extremely highly correlated with the SMH, as it should be. And it's going to be really tough if that stock can't find a short-term bottom. It's going to be really tough to be in that space and not see pullbacks pretty much across the board. And unfortunately, in Semiland, the higher beta names, deserved or not, probably will retrace the most. So that is Nvidia, it's AMD, the names that are on that list. Look, I in June, I started trimming positions. I took a quarter of my Nvidia position off the table, which we talked about here on the show. I sold DocuSign, I sold Oracle, and people are like, well, why are you selling? Look at the rally. Yeah, I know, but I can't hold everything. If as it continues to rally, I don't want a portfolio that's like mostly tech, mostly high beta tech, quite frankly. So I think this is just like part of what you have to expect. Things don't go up in a straight line, regardless of fundamentals. So if you had been taking profits in some of your tech names during this furious rally, maybe at the moment you did it, it didn't feel great, but this is a reminder of why you need to do that. And so that's where I am right now on this.
Amy, ASML raised their outlook, which is a stock you own as well.
Yes, they did raise their outlook, but the stock was down. So it's a similar thing. It's I agree with Josh. These stocks have done so well.
All right. So as we close out here, you guys got any questions? Is that Nick Santiago? Who's Nick Santiago? In the CNBC clip? Who is Nick Santiago? I don't know who that is. Anyways, this is the dollar and global liquidity. And I just want to point this out, right? The dollar is a big signal. We're breaking below this level. This is global liquidity. So the G4 central banks, the Fed, right? The European central banks, the PBOC, the Public Bank of China, the JOB, the Japan of, JOB, how's the Japan? Anyways, the Japan Central Bank. And what we saw earlier in the year is when the dollar actually peaked up here. Look at the dollar peaked. We got the bottom of liquidity. And there's a lot of reasons for that, right? Once the dollar peaked, it's basically risk on as it rolls over. And that risk on caused liquidity to come back into the markets. As the dollar weakens, more liquidity globally can pour into the it's really, it's about the dollar differentials. The dollar currency is the global currency. So when the dollar is weaker, other currencies are stronger. Therefore, and this is just one piece of it, therefore, they can actually print more liquidity into the market. Now, I don't know how to explain that to the T. I'm not a central banker, but the correlation is there, right? Dollar rolls over, and then we also see liquidity goes up. The dollar keeps weakening. Who is it, the chicken or the egg? We don't know yet. But what we did see is the dollar just broke down, right? And when the dollar broke down, we had liquidity bounce. we had liquidity actually start to bounce when the dollar broke down. And I think that is a sign of the dollar breaking down is a sign of dollars being reinvested into the markets, right? Now, this isn't market liquidity. It's more so like money growth, how much money growth is going up. So what we did just see right now is that the liquidity kind of tipped over and the dollar is retracing back up. So the whole point is, as the dollar comes down, I expect it to, we should see liquidity start to pick up, right? And that's going to fuel global assets for the most part higher. All right. I'll have a better report on this Saturday. Obviously, we do the Saturday reports, and we'll kind of go through that if you guys are interested. Maybe not. Maybe it's just a blank. Maybe I'm wrong. Maybe the correlation doesn't exist. It's just showing up. It's not real. Who knows, right? But for the most part, keep your eye on the dollar. Okay, that's my whole point here. Keep your eye on the dollar, and we'll see. Once the dollar rolls over, I expect S&P to catch a bid again. This is, you could think of it as a sell-off, right? You can think of it as, dang it, let me get off of this. You can think of this as a sell-off. As the dollar goes up, people are selling their stocks into dollars, right? Because that is where you settle. That's your settlement layer, right? To make it quite easy or quite simple. So the dollar is going up, not because, but as a result of stock selling off. Now, as the dollar rolls over, that those dollars are leaving the dollar system and being invested inside of assets, right? That's the simple way to look at it. And keep your eye on that as we move forward. I took a quarter of my NVIDIA when he did. I'm glad. Yeah, exactly. That's good. NVIDIA was up a lot, man. It was up a lot. Tesla was up a lot. So I can see the profit take place. Animal spirits may calm a bit, but we're really looking to all these indicators to see what happens. Keep your eye on oil too. Hopefully oil breaks down and the dollar also breaks down. We'll see if that correlation continues. Yeah, but anyways, I'm out of here. I appreciate you guys showing up again. Stay blessed. Can you have an overall look analysis on crypto, Chainlink, BTC, ETH? Yeah, I will. We did it earlier, but I'll do that before we take off. Bitcoin. Let's see. Let's look at Bitcoin really quick. All right. Bitcoin consolidating, right? Nothing new here. We're still consolidating on the Bitcoin price. Keep your eye on the dollar. As the dollar breaks lower, I think it'll naturally, help Bitcoin rise. So far, that hasn't been true, but I think it will eventually. Bitcoin's still in the uptrend. We could even drop down to 28,000, obviously, in this trend, and still be pretty bullish. If we throw on the moving averages, we're still holding above the moving averages. See us on here. We're still above the daily 50. We just got that golden cross on the 52. We got the golden cross, the 50 above the 100 daily moving average. We were waiting for that. So we have that support there, right? So we got moving average support. We're holding it. We got trend support on Bitcoin. We're holding that, right? The Bitcoin narrative continues to expand as the ETF anticipation comes in. A lot of people are anticipating the ETF to come in. On the weekly chart, it's a little more messy on the weekly chart when it comes to the moving averages, but also the narrative is that miners are starting to hold their BTC a little more. They're not mining as much. They're not selling. So the selling pressure is starting to slow in BTC, right? For the most part, according to that report, we don't really know. You turn to Ethereum, the weekly, let's go to the daily chart. You turn to the daily chart on Ethereum, and Ethereum is still consolidating. It's in the uptrend. Same thing here. Actually, we'll remove that. It's the same thing. It's just, you're just waiting. You're waiting for the catalyst. What is the next catalyst here? It's not going to be stock earnings. For the most part, it's going to be the dollar breaks lower, 10-year yields break lower. The dollar is breaking lower, but it hasn't rolled over. 10-year yields are breaking lower, but they caught a bid today. Pretty nice bid. So we need yields to the cost of capital roll over, and we need the dollar to roll over, right? To really get the real rally going. For the most part, we're still in an uptrend, though. We're looking great, right? We're still at the bottom. But if you're already holding it, then that's what we're looking at there. Now, coming to Chainlink, we just talked about Chainlink, right? Ethereum is great, man. The Ethereum, the supply, it's deflationary. The thesis is there. But Chainlink, I think, is the most underrated crypto in the market right now because of the real world use case. And I'll be talking about this for a while. If you did follow the newsletter, or if you're on the stream, we bought back here at 5. And I'm going to show you my actual transaction in the newsletter if you're subscribed. If you're not subscribed, go check it out. Subscribe. So give me some support. It's free. And link in the bio in the description. So Chainlink technically is trying to break out. Look at this. Trying to break out. Let me throw in the weekly. It's a little easier to see. It pulled in all the way to support that we've seen back in 2019, right? 2019, 2020. So it pulled back a lot. And right now, do we have the link to BTC chart? No, we don't have it up here. But it is trying to break out because of the news, the CCIP mainnet news, where you get Aave, decentralized lending platform, using the CCIP interoperability, which is really confusing. So I don't expect anybody to understand what that means. But for the most part, synthetics also, Arbitrum, a lot of these cryptos are starting to use CCIP. The bigger news, Swift is using it. The bigger news, Bank of New York Mellon is using it. And if you actually look into FedNow, the central bank digital currencies in FedNow, they are looking into oracles. They're looking into using Oracle networks. So this is like a win-win in my view. Don't take it as fact. This is a win-win in my view, bro, because I really expect the central bank digital currencies. When you look at BRICS, right? You look at the BRICS network. It's not really a network, but when you look at BRICS trying to get away from the US dollar, the only way for that to work is for you to trust the system, right? To trust all these other countries. And their central banks have to work together. They're off the SWIFT network. They're not using SWIFT. They're using their own little messaging systems. But to create a CBDC, you're going to need a blockchain at the end of the day. You're going to need a stable coin, something that can settle quickly and more transparently. And also, that's CCIP. I think the answer to that is going to be CCIP. So really, at the end of the day, what you're seeing here is, this is just the price action. It's not really telling you much. But if this thing has a God candle, right, big candle, this candle is probably going to move quickly to like $12 if it does break out. Measured move. You see the RSI it dipped, and the RSI is now making new highs. So we're due to break out on Chainlink pretty soon here. And the news just keeps coming out that global, banks are using CCIP and proof of reserves to prove, well, blockchains are, but really to interoperate, to create. And here's the real theme. I keep saying that, but I'm really trying to make it clear here. Here's the real theme. The real theme for Chainlink is the global internet was not fully connected. We didn't have a global internet connection until TCIP. TCIP was not the application layer. The application layer is like Apple, Amazon, Google, Facebook, Instagram, Yahoo, all these things. Those are application layers. But the base layer, right, the protocol layer of the internet is TCIP. TCIP is which holds the World Wide Web together. TCIP. Unfortunately, you couldn't invest in TCIP. Unfortunately, you couldn't invest in it. You couldn't own it. It just was there. It just was. Now what we're seeing with crypto is, in order to get full transparency, in order to be able to communicate with central banks, communicate with other central banks really quick, really fast, at a high level with full transparency, and with Oracle, so they can communicate that data is true. That's what it does. You have CCIP, cross-chain interoperability. It doesn't just work for blockchains. This is not just a crypto technology. It is also a fundamental banking technology. It is new. It connects the global internet, right? It connects the global internet with the blockchain. So blockchains are connected together now, because they're actually not. When you hear about Web3, they're not actually connected. Web3 doesn't actually work because they can't securely connect with each other. Now they can with CCIP. Okay. Now, other banks, you're seeing the SWIFT network messaging system, you're seeing other banks, they want to interoperate with each other to create these CBDC-like mechanisms so they can communicate more securely. And they're using Chainlink right now. They're trying to use the Chainlink technology to get that connection. Also, they want to pull from DeFi, right? It's not that DeFi is fighting against centralized banking, even though you hear that narrative. It's that central banking, right? They actually want to use the blockchain networks. They want to use DeFi. They want to actually dip their toes in there and mess with that technology. In order to do that, they need something to connect them to it, right? To all the blockchains. That's CCIP. That is Chainlink. And that's why we're bullish on Chainlink, because it connects everything together in a fully transparent way. It has all the data, And in the future, they are developing this thing called zero knowledge proofs, which means you can prove something is true without giving up the data, right? Without giving up your privacy, and that I think is the future of the internet, especially with AI coming in with all these deep fakes that we should be seeing. We should be seeing a lot of deep fakes with AI. You're going to see them, especially in the political sphere, right? Imagine voting. When it comes to voting, you want zero knowledge proof. You want to prove that you voted. It was you, as your ID, your social, your credit score, whatever it is, but you don't want to give that data to the entity so they can manipulate it, right? And this is what this technology does. It is it blocks you from manipulation. It keeps from manipulation, and it keeps transparency. There's a word for it. I'm going to write it down. I'm not like I don't fully understand it to the 10th degree, but I'm very bullish on it, and I'm learning as much as I can and dispensing that knowledge to you guys as much as I can. So Chainlink, I know at the end of the day, people are like, okay, when's the price going higher, right? That's the end of the day. Well, look, when Chainlink does get above 950, that's the breakout, right? $9-10. It's always 10 is always the golden level really for stocks. It's always like, or for assets, 10, everybody gets bullish at 10. And so 10 might be that level. In the intermediate, it looks like we're trying to press the downtrend. We're trying to break out of that downtrend. We've been rejected multiple times in the past year. Okay, here's the difference. The difference is the RSI just hit a 2-year high. So buying pressure hit a 2-year high because CCIP is coming, is here. CCIP is here. Cross-chain interoperability is here. And proof of reserves is here, right? Which is FTX failed because they couldn't prove they had the reserves in time, right? Everybody had to pull their money out at the last minute, caused a collapse in the whole crypto industry. If we had proof of reserves, that wouldn't have happened, right? Or would have been a lot slower, because in real time it tells you, hey, Sam Bankman-Fried is lying, right? In real time. So most underrated crypto, it's actually working in the real world. Real banks are using them. Central banks are looking at it. The crypto industry already use it, widely known. That's all I have for you guys today. Peace out. Take care. Hey, you too, Slime Z. Appreciate you guys showing up to the stream. I will be on again tomorrow, right? What is tomorrow? Friday. We got Friday. We'll see what packs in tomorrow. We'll look at the economic data. We'll go over the fundamentals of the earnings, right? If I get new earnings data, we'll look at more correlations. If I see something on Twitter, there's a lot of guys with a lot of info. I'll translate it, make it a little simpler, more simple. We'll check out Tesla, obviously, and some of these other plays to see, hey, are they going to roll over? Is the overall market holding up? What are the technicals? And the macro analysis. Where's the dollar at? What is risk looking like on the table to close it out? We will do it on Friday. If there's any new stories, we'll talk about those new stories too. Okay. Other than that, yeah, peace out. I hope you guys the best. Stay blessed. Don't be lazy. Let me read this really quick. I want to read this from Proverbs. This always keeps me motivated on a daily basis. Okay. Where is it? Don't tell me I missed it. No, it's on my segments. Proverbs 19:15 from the Bible. Okay. Slothfulness, or laziness, casts you into a deep sleep, and an idle person will suffer hunger. So basically, this is how I keep my mind straight. I got to take the wisdom of God. I'm not the wisest person in the world. I make a lot of mistakes. And what it is here, don't be lazy. Don't be lazy. Do your research. Don't just believe me. Do your research, right? It doesn't mean don't sleep too much. You got to get your sleep, but don't be lazy in all the things that you do. If you want to get a better diet, don't be lazy. Do the work, do the research. If you're trying to get in shape, don't be lazy. Do the research, get your workout done. If you want a better relationship, do the work, do the work, do what you got to do, figure that out, do the research. If you just sit there and watch, you remember the iPhone, your phone is a good device, but the iPhone, oh, look at Tesla selling off. She's making new lows, by the way. The iPhone is going to trap you. Be careful with your phone. Be careful with social media. Don't just be staring at your phone 24/7. Use it for more productivity to improve your life. Don't get sucked into it. Thanks, man, for subscribing. I appreciate you. Shout out to you, DM McKins. Don't get sucked up into your iPhone, right? I do it. Sometimes it hits me too. Sometimes I'm watching Netflix too much. I'm watching an anime, or I'm watching, YouTube video. You get sucked up in it. Say no. Say, hey, you know what? Is this improving my life? Is this contributing to my long-term success and my long-term goals? Keep a check on that, right? Keep on checking that. If you pray as much as you can. Stay in touch with the higher entity. Stay in touch with something bigger than yourself, or else all this is for nothing. All this is just, it doesn't mean anything. Because at the end of the day, I'm here to teach you guys, to give you what I know, and help everybody else out, because I feel the need to. And you don't got to be like me. My whole point is, if you're trying to improve, do the research. Don't be lazy. Don't get sucked up into this new world, this new digital world. Use the technology. Find the advantages to make yourself better. Don't be the product. Use it. Don't be the product, right? I heard somebody say the other day that, you know, there's only the two things that drug dealers, I don't even know if I can say that on here, and social media giants both do is they have users, right? Drug dealers, they have users, and social media companies have users. So don't be a user in the sense that you're the product. Make sure you use it for your benefit. Don't get sucked up into the matrix. Pull yourself out. All right. Anyways, you guys stay blessed. Get your workouts today. Eat healthy. Keep your mind sound. Stay blessed. Christ is King. We'll check you guys later.